Good afternoon, ladies and gentlemen. Good afternoon, ladies and gentlemen. We're starting a few minutes earlier than we usually do because we have so much content to cover. We want to make sure we satiate your curiosity today with this amazing panel. Ladies and gentlemen, please join me in welcoming our webcast and CPAC viewers who are joining us now. My name is Colleen Kennedy, and I'm the Executive Director of the Canadian Club Toronto. Viewers, thank you for joining us. For 121 seasons, the Canadian Club of Toronto has been a forum for business, political, and social leaders to come together to share their ideas and perspectives with us. Our club offers a diversity of speakers who address current trends and topics. The club is aware of our country's rich diversity and strives to reflect this not only in the topics we choose, but in the speakers who present them, like today's panel. I would like to acknowledge the generous support of today's sponsor, Borden Ladner Gervais, represented by Gordon Rahman. Thank you so much for your support, BLG. And now it's time to introduce our panel. Bill C-45 will legalize cannabis across the country this summer. This is relatively new territory for governments in this hemisphere. Investors are keenly interested in what lies ahead. This interest is reflected in the stock market and this packed ballroom today. There's a lot to cover. Let's hear from our panelists now. Joining us are Vahan Ajamian, Equity Research Analyst, Beacon Securities. Vahan is a capital markets professional with over 11 years of equity research experience. He covers the cannabis sector at Beacon Securities. Vahan is regularly invited by the media to comment on the state of the industry. Hugo Alves, President and Partner, Cannabis Wheaton Income Corp. Hugo is widely recognized as Canada's leading advisor and veteran in the cannabis industry. He has represented a range of global industry entities. He also acted as lead counsel or played a key role in industry transactions. Brendan Kennedy, CEO, Privateer Holdings. Privateer Holdings is the world's first private equity firm investing exclusively in legal cannabis. Brendan has been instrumental in the successful launch of global cannabis brands such as Marley, Tilray, and Leafly. George Scorsis, CEO and Director, Liberty Health Sciences, Inc. George has led companies to rapid growth in highly regulated industries like alcohol, energy drinks, and most recently, medical cannabis. Previously, he was the president of Red Bull Canada. Moderating the panel is Andrea Mandel-Campbell, Senior Vice President, Teneo Strategy Canada. Prior to joining Teneo, Andrea served as Vice President, Corporate Communications, Kinross Gold Corporation, and is an esteemed journalist and author of Why Mexicans Don't Drink Molson. Andrea, it is my pleasure to turn the podium over to you and our esteemed panelists.
Thank you. Thank you so much, Colleen. I'm so excited that you've all joined us here today. When I first came up with the idea of doing this panel, I thought maybe we'd get some interest. And this is a sold-out crowd, so this really goes to show just how much interest there is here in Canada on this subject. And I just want to, before we get started, I want to just address one not a small issue, but an issue. There's been some discussion on social media about the gender makeup of the panel. I identify as female, and while I am a pretty face, my company and I actually consulted on the last big acquisition, which was we represented Canamed and the Aurora Canamed tie-up. So in fact, I am involved in the sector. So while I do appreciate the concern, and it's a valid one, around having manels we do have a female here. So now with that said, and happy to discuss later. I think ask the first obvious question that's on the tips of everybody's lips, and that has to do with valuations. Now, we've seen, of course, a bit of a correction recently, but at the same time, there's a lot of concern and question around the fact that you have companies that may have $20 million in revenue, but have negative cash flows and are valued at 200 times their earnings and have market caps in the $5 to $6 billion range. That would make a lot of people nervous. Vahan, where do you see, do you think these valuation levels are sustainable right now?
I think for some companies they are, right? And obviously, to your point, nobody's looking at the last quarter revenue or the last quarter EBITDA and valuing these companies. It's being seen as a essentially once-in-a-generation opportunity for legalization of cannabis. And so we have an existing market in Canada. You can pick your number, somewhere between, call it 6 and 10 billion, that is going to flip almost overnight from the black market to the white market. Mm-hmm. And then specifically in Canada, because of the situation in the United States, we have the opportunity here to be global leaders, right? And we have companies on this panel that's already exporting to several countries. So there's an opportunity if you look 2 or 3 years out, and that's how I do it with all my companies. I do a DCF, right? All these companies are in the middle of expansion plans. Not all of them will go very well necessarily, but for the ones that actually succeed and become these global champions, yeah, I think the valuations in some cases make a lot of sense.
Brendan, what do you think about that? You want to chime in on that?
Oh, so I've been doing this for eight years. Started in May of 2010, and when we looked at it originally, we sized the industry about 20 different ways, and no matter how we did it, we looked at cannabis globally as a $200 billion opportunity, about $50 billion in the US, somewhere between 10 and 15 in Canada, and we sort of put that exercise aside. But to revisit that now, it's a $200 billion global industry that's transitioning from a state of prohibition to a state of legalization. And that's just purely adult use. When you add in medical, it's $200 to $300 billion. And there are no global public companies that are dominating this industry. And so you will see a dozen to 2 dozen global public companies that build the infrastructure and the brands that will dominate this industry for the decades ahead. And I think that value is some of that value is being attributed to the public companies today. It's obviously not about medical in Canada anymore. Mm-hmm. It's not about medical and adult use in Canada. It's about this global opportunity. And in Canada, sometimes people look at it a little bit myopically, just in terms of Canada. Mm-hmm. We see the same thing in California. People look at the cannabis industry myopically in California, but really we're in the midst of a global paradigm shift, and that's where the value is.
Okay, but can you seriously go from, yes, throwing around numbers like 200 billion and still giving us a particular company a 200 times earnings value? Is that really, I mean, when a lot of these companies, when you look at what they're offering as their value proposition, and they're sitting there saying they don't have a lot of revenue, they're losing money, and yet what they're talking about is, I just signed an export license. I have 16 export licenses. I have 20,000 square meters of production capacity, but there's no there yet. So should we be at all nervous, Hugo?
Well, I think that, leaving aside how the market values companies, because mm-hmm. I mean, that is by and large a function of who's willing to sell and who's willing to buy. I think when you see those announcements about the acquisition of an export license or the export to a jurisdiction, no matter whether or not it's de minimis, what you're really seeing is the creation of a global infrastructure that has a central basis in Canada, where the financing activity is centered on Canadian markets. And that's a very exciting proposition for the Canadian investor, institutional or retail. And I think the other thing you're seeing is investors looking at this, to Vahan's point, as a once-in-a-lifetime opportunity. I mean, we really have no analogy in our industrial history for this shift away from prohibition to regulation. So it's an exciting opportunity. Whether those valuations are sustainable or not is to be determined. But I think in terms of people getting excited by seeing either an increase in upstream production or a company announcing something on downstream distribution that's material, is they're establishing infrastructure that they'll then be able to use when the global economy, cannabis economy, really ramps up.
Okay, so we saw, going back to the concept of global markets, we saw some big news last week with regard to the Canadian Securities Administrators. There had been a lot of uncertainty about what was happening in the US. Attorney General Jeff Sessions, kind of rolling back Obama's position on the federal, how the feds were going to look at cannabis in the United States. So basically, there was a lot of uncertainty here in the exchange markets. The CSA coming out and basically saying you're okay to list as long as you add some increased disclosure. George, I want to get your take, because since your operations are in the US, how significant is this?
Ultimately, I think it was the right action. We came out publicly and we commend them with what they stated. Essentially, Canada was used as a market to capitalize for the US, and full public disclosures, that's just prudent for us to do as operators across the board. But what we've seen recently is important because it's a paradigm change. We saw a complete shutdown of the budgetary process in the US. We see it being extended with the Rohrabacher-Blumenheimer Act up until March 23rd. And we think, and we're quite confident, that it's going to be extended for another year. But what's important with that? Regulations will change as a result of the pressure of the average American citizen and the average Canadian citizen. So we're seeing 29 states that currently have, medical programs in place. Over the next year, we're going to see another 9 bills that are going to be passed. That's a fundamental shift in the behavior, the ideology, the belief of the average American. And, we are confident, and that's why we've entered into the US, that, that policy will change. Policy will change because 80% of Americans are supportive of it. And as a result of that, the Canadian regulators will have to change policies that are more favorable for capitalization of American companies.
And yet the TMX isn't there yet.
No.
So what are we to take from that?
Well, listen, I think the TMX will get there. We were quite fortunate that the CSE has really built a platform for all of us. I think many of us are listed on the CSE. We've seen the emergence of a great platform for all of us to start listing. We see a new ETF launching on Valentine's Day, which is going to support many of the programs that each of us have. So whether the TMX is supportive or not, we have other platforms to capitalize.
Brendan, you're from the United States. You live in Seattle. What is your sense of where the U.S. is going? Do you think that making recreational cannabis legal is an inevitability for the U.S.?
Definitely. That's part of our core thesis, that this is a mainstream product consumed by mainstream people around the world, and because of that, the end of prohibition is inevitable. I think that I'm not certain that it'll happen very quickly in the United States. This year, we'll go from one country in the world who has legalized cannabis for adult use, Uruguay, to 2 when Canada legalizes this summer. I don't expect the U.S. to be the third country. I think there will be a third country, and I think there will be a third country fast. And just as countries around the world look at Canada's the ACMPR as a regulatory framework for medical, countries around the world will look at Canada's adult use model as they look to implement their own. And I think that is one way that Canada has been leading in terms of medical, and Canada will lead the way for other countries around the world in terms of adult use.
What's your bet for third country?
If you'd asked me 6 months ago, I would have said I had no idea, which actually makes me nervous because like George was saying, we'll go from 30 states to 38, 39. In the U.S. with medical. I think we'll go from 30 countries in the world to roughly 40 by the end of this year, a very similar number. The third adult use country, if I had to bet today, I would probably bet on New Zealand because they're talking about it. They're actually talking publicly about legalizing cannabis there.
Okay.
If I could just jump in on the point of the U.S. operators. So obviously Beacon Securities, we're big believers in the Canadian opportunity and the global opportunity. But what makes us almost unique is that we were the first ones to write up the U.S. opportunity. So about a year and a half ago, in November 2016, when California and Massachusetts, they all voted in favor, we were writing up the industry, we were writing up companies in the industry. And now what we're seeing is just in the past week or so, about 3 of our larger institutional clients, the ones that were early into the sector, they were buying the Canadian operators 2-3 years ago, and the conventional wisdom was, "Is a joke, and what are you doing?" And so a lot of them are now trimming some of their Canadian holdings and buying the US operators. And I think that trend sort of accelerates probably in the second half of the year once the halo comes off legalization over the summer. I think that's one thing to look out for is we see the US as being the inevitable next big wave for stock market return.
Hugo, you agree with that?
Yeah, no, I mean, I would just echo what Brendan said in terms of the inevitability of it and it not being imminent. At the same time, I think I also would echo what George said and commend the guidance put out. I think it's not being able to participate in the US cannabis market for TSXV and TSX listed issuers is a disadvantage and really kind of hinders the growth of our market and also erodes our leadership position on a global basis. So.
Okay. I want to get to that leadership position in a couple of minutes, but first I want to just drill down on a few things that are happening now, some flags that I think that go to the heart of the integrity of the sector, which is, I think, an important issue to raise. There are a few issues, product recalls being one, accounting being another, and governance being a third. I want to talk a little bit about the recalls. We've seen several recalls and surfacing of banned pesticides in companies that claim to be organic, for example, and we've actually now seen a couple of class action lawsuits coming up. In fact, the Globe and Mail reported on a story of banned pesticides being hidden in the tiles, the ceiling tiles of one firm when Health Canada inspectors came by. None of these gentlemen work for those companies. But my question to you is, this has to be a big deal, Hugo.
Look, I think it's either, it's both a negative sign, so there was some contravention of applicable regulation. It's also a sign that regulations work and that the auditing process that Health Canada has established, the tracking and record-keeping requirements work. I mean, a recall works when a regulator determines that there's been something offside with the product and they force the producer to recall. So I think the fact that there are recalls shouldn't be taken as a sign of bad industry practices. It's a sign of good regulatory practices. What happens on a one-off basis or on a periodic basis, like this is a restrictive regulatory environment. It's restrictive in the way that cultivation happens. I mean, Brendan could probably speak better to that in terms of the differences between a US cultivation facility, large-scale US cultivation facility, and a Canadian one, but it's restrictive, and there are always going to, in any regulated environment, there are going to be people who push the envelopes a little bit and try and get away with things. When they get caught, I think it's a sign that regulations work.
Brendan, anything to add there?
I would say two things, right? There's two different types of issues. One is around microbials, mold, mildew, things like that, and then pesticides. And so if you go to a black market cannabis seller in Toronto or in California, there are huge issues with microbial contaminants as well as pesticides. And roughly between 60 and 80% of the product in the illicit market, either in California or in Canada, is tainted. Tainted with microbials, tainted with pesticides, the most predominant pesticide being a product called microbutanol, which is used on other foods you eat, but if you combust it, it turns into cyanide. Very dangerous product, and there are illicit growers in Canada and in California and other places around the world that are using this pesticide for very sick patients. When we talk about recalls in Canada, certainly there will be microbial incidents similar to spinach or other food products, and that's a separate issue. When you're talking about companies where management and employees are consciously making a decision to use banned pesticides because they can't grow this product without using that pesticide, I think it's a very dangerous issue, not only for all of Canada, but for those patients who are using this product many times in a very, with a debilitating illness where their immune systems are compromised. So I think there should be harsher penalties for individuals and companies that conduct illegal activity.
Yeah, I think, Brendan and I have been exposed to some of the cultivation sites in the US, and I think I think we should all be proud that we are leaders in the market, not only in Canada, but globally, and there are good players within the industry. What's important is, in the infancy of any industry, that all the good players get together as an association and start building up the bar and ensuring that standards are at the highest level. And we can only work together as an industry to enhance that. That's really important, to make sure we have the best-in-class SOPs, QA standards within our facilities. So it's important for us to implement it. But I think what's also important is with the extension of new licenses coming into the space, there are some new participants that maybe aren't as well capitalized, maybe are micro grows, and could be in jeopardy potentially or at risk of being the bad players in the industry because they need to protect their assets. I think it's all of our responsibilities, all of us as an industry, because if we don't help them to get better and to perform at that standard, then one black eye is a black eye on the entire industry. So I think that's critical. And I think this panel would agree that we're all here to assist and ensure the entire industry raises to a higher level.
Yeah, I agree. We're seeing a new industry emerge, and we're seeing the regulatory framework get tightened. In some cases, they're actually loosening certain things that you don't have to have a vault anymore. But obviously, the first approach they had from Health Canada was pesticides aren't allowed, therefore nobody's using them. Well, clearly now that wasn't appropriate in the beginning, and now it's every batch has to be independently tested. Right? So consumers should get more confidence in that.
So I want to move on to some on the accounting side and looking at financial statements, because this is tough, I think, particularly for retail investors. Right now we have, there was a great article actually in Canadian Business Magazine not that long ago talking to forensic accountant Al Rosen about this, and he really sees a lot of problems in terms of the transparency and disclosures around the accounting, in particular around putting a fair value on plants for accounting purposes. And he talks about how the fact that all companies are using different calculations and no transparency on those calculations, and this is leading to inflated profitability at some companies. And the actual reference is something called unrealized gain on changes in fair value of biological assets. Maybe Vahan, I'll start with you on that.
Sure.
What are you seeing there?
I'm sure this is every CFO's favorite discussion topic when they're talking to investors, right? So this is not a cannabis industry specific point, it's more of an agricultural point under IFRS. So essentially what they do is, in a nutshell, the IFRS forces you to take into account the growth of value of plants during the quarter. So, at the start of the quarter, you had so many plants at this level. The end of the quarter, you had so many at this level. Even if you haven't harvested, never mind sold them, the point is, for accounting purposes, you're supposed to somehow recognize the value of the growth in these plants onto your income statement. And essentially, what happens is it's a sort of a contra entry to gross margin. So it comes out of cost of goods sold. Yeah. So you get these situations where the gross margin is 170%, which obviously makes no sense, right? So I think there's two issues. That's one issue, which actually, because almost all companies are currently in the middle of expansions, and every quarter they're growing more plants than they were the quarter before, the year before, this problem is probably going to persist until all your plants reach full capacity and they're running at full tilt. At that point, you won't have this issue anymore. So that's going to be quite a while.
So should everybody who's looking at a financial statement be looking at it with a grain of salt then?
Well, in terms of the IFRS, yes, I think it's not as helpful as they would like to be. Right? So therefore, what a lot of the management teams of companies have been doing is putting out a adjusted cost of goods sold. So what's your adjusted cost per gram based on, if you remove all these non-cash funky items that IFRS forces you to put on their financial statements. Even then, however, if one company could say $1.20, another company could say $1.50. Sometimes you get 2 or 3 definitions from company A, and then 2 definitions from company B, and none of the definitions necessarily match in terms of accounting treatment. I think that's something where the industry has to come together and say, this is how we're going to do it from now on, because it is confusing for investors.
Well, the CFO of AFRIA is actually saying the OSC should be stepping in and actually showing some leadership here. Do you agree?
I mean, I wouldn't know what the exact regulatory it should be, whether it's the Cannabis Council of Canada, the OSC, I mean, some way or another, there needs to be an easier way for investors to understand what's your cost, not what's your cost with this, not and minus that. Right? The revenue program is pretty simple to compare companies again, but the cost is it's a bit of a situation.
Do you want to add anything, Hugo? Or?
No, not my area of expertise for sure. I know the issue, and I know there's no industry standardization around these things. There's also no spot market for cannabis, which doesn't help. But yeah, I'm going to defer and agree with whatever Vahan just said.
Okay. All right. Well, with these considerations, maybe we'll move on. As I just kind of wanted to lay the groundwork a little bit, and then talk about where we see the future of this sector being 5 years from now, and what are the key differentiators that are going to be deciding who is going to end up winning here and who isn't. And Hugo, maybe I'll start with you there.
With me?
Yes.
Great. So 5 years. Wow, that's a long ways to look out. So in 5 years, where I'd like the industry to be is I'd like it to, I'd like the regulatory framework to evolve to actually truly compete with the black market in terms of availability of products. I'd also like to see the research and development and the science around cannabis catch up to the rest of pharmaceuticals, because I think that presents a tremendous opportunity. I think that you will see a transition in the way that companies are valued, and see a shift away from the market rewarding absolute production capacity to more of that sort of midstream value enhancement, to placing a higher value on the IP around cannabis. And in terms of where Canada sits in the entire hierarchy of global cannabis, unfortunately Canadian corporate history is littered with lots of examples where we had a great head start and global giants who kind of fell off. So I hope it doesn't repeat itself here, but I would anticipate a much higher level of competition for that sort of title. And I think once the U.S. eventually legalizes at a federal level, you will see the sort of tide switch. And it's just a function of how big the markets are, and that's why one of the reasons why I say it's unfortunate that our senior exchanges have taken the position that they have, because it's really preventing us, the people that are listed on that exchange, from going and taking a more active leadership role, more active operational role in the U.S. market.
And to follow up on that, I wrote a book about the failure of Canadian companies to build these global brands. So for me, this is a really fascinating topic and an interesting opportunity. Brendan, you talk about the fact that one of your key beliefs is the winners are going to be the ones with the brands. Now, if you have a regulatory climate like here in Ontario, where we're going to run this industry like the beer store, and we all know how successful the beer store has been in developing Canadian global brands of beer, are we setting ourselves up for failure in terms of how we're going to be regulating this industry?
So I feel like somehow I've been set up as a pessimist on this panel, and I'm not, right? I've been doing this for 8 years. I've raised $200 million to invest, over $200 million to invest in the cannabis industry. I'm extremely bullish on this opportunity. I think there is a conflict, right? So if you think about I say this both in California and here, two of the world's largest economies are legalizing cannabis for adult use this year, right? California, if you look at them as an independent economy, roughly sixth in the world. And they legalized January 1st. And California is extremely influential in terms of culture, brands. Those are the brands of cannabis that you see in California will be the brands of cannabis that you'll see in movies. You'll see them in TV, and those brands will spread throughout the world. Canada, at the same time, this summer is legalizing cannabis for adult use. And Canada will be extremely important in terms of international treaties, the UN. How do just as other health ministries around the world look at Health Canada's regulatory framework and adjust it, model it, match it to their culture in their particular country, they will do the same thing with adult use. The question is going to be, and really going back to the title of your book, will consumers around the world consume the Molson of cannabis, or will they consume some other brand? And Canada has a huge opportunity to lead in terms of a regulatory framework, in terms of brands, and certainly capital, right? The Canadian companies have the ability to shape companies and investments around the world. And the question will be, will Canadian brands ultimately be the ones that win, or will brands from other countries be the ones that win? And it's hard to know. If you think about 80 million people, roughly a little bit more than 40 million, a little bit less, a little bit more than 40 million in Canada or California, a little less than 40 million in Canada. 80 million people will have access to this product this year. And you're going to see one framework in California, right? All 40 million people will have access to the same brands with the same regulations, and you're not talking about plain paper packaging. You'll see something very different here in Canada.
It's not going to roll out on a conveyor belt.
That's right. It's not. It'll be different
rubber
from
gloves
province
on.
to province. Province to province.
Yeah.
Yeah, I would have to actually jump in there. I don't think Canadian brands are going to be the dominant global brands, because if you look at the way the Cannabis Act is set up, the promotion and marketing of non-medical cannabis in the country and medical cannabis, it's taken us like our regulatory regimes around advertising kind of skew from alcohol, which is very permissive, to narcotics, where we are right now, which is restrictive, to tobacco, which is prohibitive. And when you do a side-by-side comparison of the marketing and promotion activities in the Tobacco Act and the Cannabis Act, they've gifted us with one or two small kind of advantages that tobacco doesn't have, but by and large, it's a direct cut and paste. And you just have to sort of take a look at the tobacco industry in Canada, where it sits in the global hierarchy in terms of brand development. What are the tobacco brands developed in the last 10 years? Like, I couldn't tell you one, because you're just not allowed to market and promote, and tobacco companies spend countless dollars to try and get a fraction of the brand traction that alcohol companies spend. So I'm quite pessimistic in terms of brand building in the non-medical regulated market.
I would really like to, I look at branding in a different light, and how branding will impact regulations and consumer education. Because ultimately brands are lifestyle, the way it resonates within the consumer's mind, but it's also an education platform. Many people buy brands because they know the consistency and the quality of what it is every single time they buy it. And if the regulators don't allow us to develop brand X, how will the consumer consistently go in and understand, one, the quality, that it's been tested, that it's pesticide-free, the efficacy of it, how it will impact them, and consistently go back to that brand? And that's my biggest concern with the regulations as we talk today. The second piece that's important is branding will allow the legal market to differentiate from the illicit market. Mm-hmm. And again, if Bill C-45 is so stringent and it doesn't allow us to brand, we're doing ourselves a disservice in actually educating the consumer. So that's fundamentally my challenge as I see branding, and Brendan has seen it in California. Brands are thriving, and congratulations on the latest acquisition of some of the brands. But we need to allow for branded products to evolve in our marketplace.
So Vahan, did you want to add something?
And to jump in, one of the things I think is important to note is almost the psychology of branding and the difference between Canada and the US. Mm-hmm. I think in Canada it's seen much more as a commodity, especially when the government talks about here, it's going to be $10 per gram at the retail store. That's it, as if there's one price, and if I can grow for 20 cents cheaper than you, then I win and you lose, right? I think because of how big a role mining, oil and gas plays in Canada, it's just seen as this is the price of marijuana and that's it. Whereas in the United States, it's totally different. It's seen as a consumer product. You walk into a dispensary, there's stuff that sells for 13 US, 15 US, 18 US a gram plus tax. Right here, it's at least perceived quality, and what are you willing to pay for the good stuff? I think that's going to change over time as the LCBO starts, another province, they start selling different products and seeing, well, consumers are actually gravitating more to one and would pay a premium for certain brands than they would than others.
Okay, I'm going to take I have some questions here from the audience. In a legal, financial, social sense, what does the federal government still need to do before summer 2018, which is the launch date for recreational? Hugo?
Well, they still need to do a lot. I mean, C-45 is still at the second reading of Senate. C-46 is now at committee, so I would anticipate C-45 is going to have to go to committee as well. So it's got to pass through the reading and get royal assent. The federal government just cut off the consultation period for giving feedback on the regs, so they'll have to incorporate those. We know that they're busy drafting the regs, which is where all the meat is in terms of how the system will work. So there's still a lot of work to do, and then the provinces have to roll out their provincial distribution platforms, and to date there's only 2 provinces that have received the royal assent on their proposed framework. So there's still a lot of work to be done. People are working really quickly and really hard, and I mean, I think that the approach that the government's taking should be commended, which is, and I think it should be, the way the ACMPR played out should be commended. I mean, there's lots and lots of instances in Canadian regulatory history where the government has tried to really get it perfect the first time. And what ends up happening is, things get delayed. Maybe the economic climate changes and other things get put on the back burner. We saw that with the Liberals turning the corner plan, the government's turning the corner plan and emissions trading. And now this is very much of, we have an objective, we want to implement it, we know there's going to be hiccups, but we'll learn by doing. So I think that's the best possible outcome that as Canadians we can hope for.
Okay. Another question, do you foresee an oversupply of cannabis in Canada at a later stage? I don't know who wants that one.
Well, I'll take it. I think in the short term, we're going to see significant shortage. I think if the stores are going to be open, call it July or August as expected, there's simply not going to be enough product to go around. I mean, obviously a legal tested product. We have seen almost every company announce major expansion plans. Some will execute very well, some will, stumble. So I think eventually when you look out, maybe years 4 or 5, there's a potential it could be oversupply. And then it's going to come down to the global market, right? To what extent are exports going to be kind of a release valve for if there's too much supply in the market? And then as, especially by the end of this year or going into next, I mean, the new company looking to raise money, licensee number 206, I mean, it's going to be difficult for them to be anything more than, a niche or, micro-cultivator.
Mm-hmm. But I mean, if we look at the way, global supply chains evolve in any industry, I wonder, will we actually be growing cannabis in Canada? Does it actually make sense, Brendan or George?
I think long-term, most of this product will be grown in other places in the world. We're investing heavily in it, and I say that knowing that I'm investing heavily in a facility in Southern Ontario, a 13-acre greenhouse. But ultimately, you're starting to see it already in individual U.S. states, the commoditization of cannabis as a crop. You can go to Oregon today and get $50 pounds, right? 25 $25 kilograms, right? Very, very inexpensive crops, a very inexpensive commodity. But you're also seeing the brandification and the productization of this industry. And we talk about cannabis as if it's one thing, whole flower or milled flower or maybe some oil. But there's really a whole spectrum of products to vape cartridges and microdose mints, beverages. And you can go into, going back to brands, you can go into a dispensary in Vancouver and see beautiful products, right? That's the illicit market. And I question, how is this new legal market going to compete with that illicit market in terms of brands and products? In Washington or Oregon, the percentage of revenues from flower has dropped from almost 100% to around 50%, and which means 50% of consumers are purchasing other form factors. They're not buying a flower bud in a bag. They're buying something else, and that'll be really interesting to see how that evolves in Canada. And those will be the products. Those other products will be manufactured here. The core crop might be grown in Colombia or the Congo, somewhere on the equator.
Yeah, I think Brendan really hit it. We're scratching the surface in terms of how cannabis is used for medical or for recreational platforms. We don't know the derivatives that will continuously evolve in this marketplace. We know some of them within a recreational platform. like what Brendan mentioned, but I think it's also going to come down to, it's not a question of whether there'll be an oversupply, it's a question of will we be able to be competitive on a global platform in terms of our cost structures? And that truly is the question. And that's why many companies are focusing on their cost structures. They're focusing on being sub $1 grams because they're seeing it as an API or potentially just an input rather than a finished good that will provide an input for branded items. And I think, like anything, we need to be competitive, and we have the opportunity to be first in market with a really regulated market that we could. So we really need to focus on our cost structures to continue to be the leaders in the space and ensure that there's not an oversupply, because it'll allow for exportation. You know, in some of the markets that we've already mentioned, they're producing it at a 1/10 of what we're producing it at.
Where's that, for example?
Such as Uruguay. And some of these markets, and we need to become competitive. We need to get ahead of it. And that would be the fundamental.
Can we really compete, though? I mean, it's like, you know, manufacturing that moves down to Mexico.
I think we could. I really do. I think we could when we take a look at some of the standards that we implement. You know, we're looking at GMP facilities. We're looking at GACP production. And as long as we continue to reduce our cost structure by increasing our standardization, I think then we'll still be viewed as one of the leaders. But there's different purposes for different cannabis and different inputs that we'll be able to utilize.
But branding remains key then.
That's right.
Mm-hmm. Hugo, you wanted to?
Yeah, I would just add like two comments to that. I think the first is, you know, to the extent that we still, you know, there's still a lot of work to be done on the legal and regulatory front to actually implement non-medical adult use in Canada. There's even, you know, a bigger mountain of work to do on that front before I think the government opens its borders to the importation of psychoactive substances, right? Like we're governed by 3 international treaties that don't really work, you know, that way of just free import and export. Is, you know, I think that the second thing, just to echo something that Brendan said, is if you look at the way the federal government's kind of structured their licensing requirement, their new sort of set of licenses, it does very much speak to that kind of transition away from pricing cultivation as this pharmaceutical endeavor, right, with the new cultivation licenses, and really putting the regulatory choke point downstream into what they call the processor. And the processor is very much anticipated to be like, as you know, this manufacturer, the person who takes the agricultural commodity in, tests it, and then refines it into a product.
So, you know, you mentioned, a few of you have mentioned the whole black market side of things, and I'm assuming there's a fine balance that you have to find in terms of the pricing and the taxes and ability to cut out the black market and have people wanting to go and buy it legally. And I'm just wondering, are there any concerns from any of you on the panel about where the government is going on the taxing and pricing side of things in terms of it's looking to remove the black market, but is there a challenge that it could actually put some people out of business? Hugo.
Me? Oh, sure, I'll take that one. No, I don't think so. Like, I mean, the way we kind of look at the black market is it's always been there. Yeah. And it's always going to be there. Like, you're never going to displace the entire black market into a regulated market, either because of access issues, pricing issues, or just civil liberties issues. So I don't think you'll ever displace it. And I actually think that the way that the jurisdictional issue in terms of allowing the provinces to set up their own distribution systems is, you know, in my view, all but assured that a very continued and healthy medical market where governments can't really, provincial governments can't interject themselves into the supply and distribution channel.
Okay.
No one drinks moonshine from a jar anymore, right? Everyone buys packaged branded alcohol because it's safer, right? Given that choice, everyone's going to pick a regulated, safer, branded product. And the same thing, assuming relative similarity in terms of price. And so that's really the big question. You know, assuming the prices are somewhat similar, any Canadian will pick a branded, safer, regulated, tested product than something unbranded in a Ziploc bag. The question, the challenge will be how many of those illicit growers, processors can you transition to this industry, either as entrepreneurs or as employees, because they know this product well. And that'll be, the faster you get people to transition from that illicit, people, whether they're workers or consumers, to transition from that market, the more likely and the faster this new regulatory framework will succeed.
Okay, so we just have a couple of minutes left, so I just want to ask, maybe go down the line really quickly and ask this question. So if we're looking out 5 years from now, a lot of people talk about consolidation. Not everybody's going to be here 5 years from now. When you look out over the horizon, what do you see from each of your own vantage points? What is from your point of view, that winning strategy? What is it going to take to still be here 5 years from now, George?
You know, I think operational excellence is the key area that we need to focus in on. And you know, we've been so narrowly focused on the capital markets that potentially, in many cases in the industry, we haven't focused on the integrity of our operations and really building a world-class operation, in the sense that when truly the markets change downstream and we're viewed in terms of our EBITDA and, you know, our cost structures properly, then I think that that will be the true differentiating factor. And those who are investing in really the excellence of their operations will be the winners. They'll come out above. You know, I think it's also the ones that are looking outside of Canada. I think, you know, again, everyone on this panel has opportunities outside the Canadian platforms. And I think that if we truly are good operators and we start extending far beyond just Canada to really build you know, the world-class leadership position that we deserve, I think that then that will be the winning organization, the one that you should really bet behind. But I really suggest that, you know, everyone works towards operational excellence, and I continue to say it, and it's a platform that we really zone in on.
Brendan.
I would say that, so Tilray is a Canadian company. We export product. Tilray is the first company to ever legally export medical cannabis from North America. First company to legally import medical cannabis into the EU. And we ship Canadian cannabis to Australia, New Zealand, Chile, Germany, Croatia, Cyprus, the Czech Republic. Will ship to half a dozen more countries this year. And there's the potential for Canadian medical cannabis companies and brands to lead the world, to lead the world over the next 5 years. And so that would be something that I would look forward to. Similarly, if you look at Seagram's or Canadian Club, there is the opportunity for Canadian companies and Canadian brands to be the brands that shape the future of the adult use cannabis industry globally. And I'm not Canadian, but I employ 250 Canadians. And everyone in this room Canadian brands could be the brands that win. Canadian brands, you know, both should and could be the brands that win. And that should be top of mind as we look into the next 5 years.
Hugo.
Yeah, I think the winners are the ones that establish a very robust and diverse cultivation platform, both in terms of geography and in methodology, and that includes international. And I think, you know, that create or license or acquire strong intellectual property around the cannabis plant, whether that be brands, whether that be a particular process, and then those that open up diverse distribution channels, including international ones.
Okay, Vahan, last to you.
Yeah, I think over the next 5 years, it's going to come down to brands, and it's going to come down to the quantity of product, quality product you can put on the shelf. One anecdote I like to give was over the summer, we had taken a client after the market closed down to the bar, and the waitress asked him, well, you know, what will you like? And you could tell he hadn't really thought about it, so he just kind of reverted, oh, I'll take a Corona. And Corona became 4 Coronas. And then an hour later, we had ordered 12 Coronas. Why? Because Corona spent a lot of money convincing you that on a nice, hot, sunny day, you drink a Corona. Nobody asked about what the cost per milliliter was, or this is a good brand. This is what I'm drawn to, right? And I think, and it's the same anywhere, whether you're getting in Mexico or in Toronto. So I think the companies that can produce that sort of affinity to a brand, those are going to be the winners, and keep it consistent actually across every country.
All right, well, thank you very much.
Thank you.
Thank you so much, panelists. On behalf of the Canadian Club of Toronto, I would like to thank you for sharing your expertise with us today. We remain fascinated by your account of the many intricacies of the Canadian cannabis industry. These are details that the public is not often exposed to and therefore rarely considers. Interest is piqued, I hope, particularly as the countdown to summer begins. Vahan, Hugo, Brendan, and George, your experience and expertise are hugely impressive. I am certain that you'll be back at the club to provide more insights post-legalization, I hope. I hope you'll join us again, and all of you will join us again for an update. And to our moderator, Andrea, thank you for guiding us through such an interesting conversation. Before we conclude, here are some highlights of upcoming club events. On February 28th, we'll try and help you beat the February financial blues with an economic and finance panel. And on Tuesday, March 6th, the important topic of sexual harassment in the workplace will be addressed by another dynamic panel. To order your tickets or to learn more about the club, please visit us at canadianclub.org. You can also join the conversation via Twitter and Instagram by following us at CDNCLUBTO. I would like to extend another thanks to our sponsors today, BLG. Thank you. We would also like to thank MediaEvents.ca for live streaming today, for CPAC for being here, and thank you all for joining us today. I hope you have a great day, and we'll see you again.